Imagine for a second that the most powerful governments on Earth are quietly preparing for a financial earthquake. Right now, completely beneath the surface of the global economy, we are witnessing a historic, highly secretive wealth transfer. And here is the crazy part. The buyers aren't retail investors or Wall Street hedge funds, they are sovereign nations. We need to dive into this because what's happening behind closed vault doors right now is fundamentally shifting the balance of global power, and almost no one is talking about the real reason why. 1,045 tons. That is how much gold the world's central banks bought in just a single year. To put that massive number into perspective, the entire world's gold mines only produce about 3,600 tons annually. So central banks just swallowed up nearly 30% of the global mine supply in 12 months. And this isn't just a temporary blip, guys. They've sustained this aggressive buying for 3 consecutive years. It's a historical market anomaly. These are what we call price-insensitive buyers. They literally don't care if gold is at $2,000 or $5,000. They are buying relentlessly. So the ultimate question is, why? Why are nations quietly stockpiling all this physical wealth at record-breaking prices? What exactly do they know that the rest of the public doesn't? Well, the answer to that question reveals a massive geopolitical realignment and a secret pilot program that will completely alter how you see the money sitting in your own bank account today. The biggest reveal of this entire story is still coming, but to really understand it, we have to step back.
Welcome back to Dollar Chronicles. We're here to decode the complex financial world and uncover the stories you won't hear on the nightly news. If you want to understand the hidden forces shaping your money, make sure to hit that like button and subscribe to Dollar Chronicles right now. Let's get right back into it. Section 1. The Trillion-Dollar Weapon. To understand this sudden, insatiable hunger for physical gold, we have to look at the exact moment the rules of money changed forever. For decades, the US dollar was the undisputed global safe haven. But February 2022 was the catalyst. Western nations froze over $300 billion of Russia's foreign reserves. Instantly, a chilling message was broadcast to every non-allied nation on Earth. Your dollar reserves can be weaponized and restricted with the push of a single button. The dominoes started falling fast. By August 2023, the BRICS coalition expanded from 5 to 10 members, bringing in massive energy producers like Saudi Arabia. And then in October 2025, they launched a secret financial pilot. We'll get to that pilot in a second, but first, look at the immediate fallout of that 2022 freeze. The real-world consequence of weaponizing a global currency is incredibly dramatic. Back in the year 2000, the US dollar held a commanding 72% share of all global foreign exchange reserves. Fast forward to 2025, as panicked nations desperately started seeking alternatives, that share plummeted down to roughly 58%. At the exact same time, gold's share of global reserves surged from 10% to over 17%. We are literally talking about trillions of dollars being aggressively reallocated from paper promises into physical, untouchable metal.
And you might be wondering, who exactly is hoarding all this wealth? It's not just who you might think. Yes, China's central bank has been on a relentless, highly publicized gold buying streak for 21 straight months. But look at the top of this Q1 2026 data. Poland. Poland added a staggering 31 tons in a single quarter, bringing their massive stockpile to 614 tons. Why? Well, because they sit right on the border of NATO and a war zone. For countries like Poland, gold isn't just an investment portfolio, it is the ultimate national security hedge. And this defensive strategy is spreading like wildfire. According to a devastating 2026 survey by the World Gold Council, a massive 74% of central banks now expect the US dollar's share of global reserves to continue falling. Even more shocking, a record of 45% of central banks plan to actively increase their own gold reserves over the next 12 months. This begs a massive trillion-dollar question. If the world's central banks are quietly rushing for the exits on the dollar, what exactly are they preparing to replace it with?
Section 2. The Secret Gold Currency. Here is where the story takes a massive turn. For the last few years, everyone just assumed these nations were playing defense, buying gold simply as a shield. But enter the unit. On October 31st, 2025, the BRICS coalition launched a pilot phase for a brand new international trade settlement currency. The catch? Its value is pegged directly to 1 gram of gold. This is a financial weapon designed specifically so nations can trade vast quantities of goods, like oil from Saudi Arabia to China, entirely outside the US dollar system. No dollar conversions, no Western banks, and absolutely no risk of being frozen by sanctions.
Consider the sheer scale of what they are trying to build here.
The unit is designed to be backed 40% by physical gold and 60% by a basket of BRICS national currencies. Keep in mind, this coalition now represents roughly 45% of the global population and 35% of global GDP. Just think about the math for a second. Even if this new currency captures a mere 10% of the internal trade between these nations, it would require hundreds of billions of dollars in physical gold to actually back it up. This is exactly why they are sweeping up every physical ounce they can find.
Which brings us to the ultimate cliffhanger. With central banks buying gold at unprecedented rates and a massive, powerful geopolitical coalition launching a gold-backed rival currency, is this the end of the US dollar? Are we actually watching the fall of the American financial empire in real time? Section 3. Is the dollar dying? Let's separate the internet rumors from the cold, hard economic reality. The truth is, being a global reserve currency is incredibly demanding. You can't just declare it, you have to earn it. A reserve currency must be freely convertible and possess deep, highly liquid bond markets. This means it has to be extremely easy to buy and sell massive amounts of assets quickly. And here is the hidden advantage of the United States: its unparalleled treasury market. Central banks know that if they need to liquidate $1 trillion tomorrow, the US market can handle it without a flinch. The euro? Its bond markets are totally fragmented across different countries. And the Chinese yuan? It suffers from strict capital controls and isn't even freely convertible. If China gave up those controls today, massive amounts of money might actually flee the country.
And that brings us to this staggering statistic: 89%. Despite all the geopolitical shifting, the sanctions, and the wild gold buying frenzy, the US dollar still commands over 89% of all global financial market transactions. It is quite literally the lifeblood of international finance. Unwinding that level of deep global integration takes decades, not months.
The data tells the real story of exactly where we stand today. Yes, gold has surged from 10% up to 17% of global reserves. It's making incredible gains, no doubt. But the Chinese yuan, which is so often cited as the primary challenger to the throne, is sitting at barely 2%. The US dollar's market share is slowly leaking, sure, but it remains incredibly, overwhelmingly dominant.
Plus, there are very real vulnerabilities in this central bank gold master plan. First, a strong US dollar and rising real yields make holding gold, which pays absolutely zero interest, very expensive for a country. Second, the cost of hoarding it is becoming astronomical. With gold hitting peaks over $5,500, buying 1,000 tons now costs around $160 billion. And honestly, the biggest flaw? The BRICS nations have deep internal rivalries. Getting two superpowers like India and China to completely align their financial systems and trust each other is a monumental and perhaps impossible task.
Section 4. The final verdict.
So what is the bottom line here? The biggest takeaway you should have from this explainer is that we are not witnessing the sudden, dramatic death of the US dollar. Far from it. But what we are witnessing is the birth of a fractured, multipolar financial world. We're moving away from a unipolar system where the dollar is the only game in town into a fragmented reality where gold serves as the ultimate geopolitical insurance policy. As Chinese economic analysts recently noted, and I quote, "Gold is globally accepted as the ultimate means of payment." And that right there is the defining truth of this new era. As long as the threat of weaponized reserves and frozen bank accounts exists on the global stage, sovereign nations will relentlessly continue to hoard this timeless metal. The trust in centralized paper promises has fundamentally broken. Think about it from your own perspective for a second. If you woke up and knew your personal bank account could be frozen tomorrow by a foreign power, what would you do? You would probably buy something physical, something you could hold in your hand, something no one could delete with a simple keystroke. That is exactly what the world's central banks are doing right now, just on a multi-trillion-dollar scale. I would absolutely love to hear your thoughts on this. Do you think this BRICS coalition will actually succeed in shifting power away from the dollar? Tell us your opinion in the comments below. If you thought this story of global finance was incredible, wait until you see what we have coming next. Make sure to hit that like button, subscribe to Dollar Chronicles, and to uncover the very next piece of this massive puzzle, click the next explainer on your screen right now. I'll see you there.